Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Tuesday, April the 16th. Before we begin, I'd just like to say that my thoughts and prayers go out to all of those who have been hurt in that senseless act of violence in the Boston area on that Boston Marathon. And my heart goes out to all of the Bostonians out in that area who follow us here on the East Coast. Terrible tragedy, and I hope whoever is the culprit here gets caught real quick, because it's just a terrible thing, and that people are crazy enough to do something like that. So again, my thoughts and prayers go out to all of those in the Boston area, and hopefully this will get resolved as quickly as possible. Okay, aside from that, let's get to the markets. I had a wild day yesterday in the markets. Dow down 265, gold down 97. At one point, gold was down 120 points or so. NASDAQ down 75, S&P down 36. That was also fueled the fire. That didn't help with that terrorism act in Boston. Aside from that, late last night when China came out with their numbers, their GDP, that didn't help, and that kind of sparked the sell-off in the precious metal sector: copper, gold, silver. You name it, it was down across the board. We did get some activity yesterday, which was really refreshing, nice to see. And I had mentioned that when the market continues to rally like this and continues to grind higher with not one pullback in sight, you're going to have a run for the exits. Now, yesterday was not a run for the exits, at least in equities. In precious metals, yes. And that's what scares me, that could happen again, like the flash crash in May a couple of years back. So that's why I say you have to use caution here when you're trading and swing trading overnight. So buying some protection really is a smart way to manage your portfolio. Yes, okay, so if you buy in puts and they expire worthless, at least you could sleep a little bit at night. And if the markets continue to grind high, you're going to make that up anyway in your portfolio. So let's real quick, we're going to get into the charts. What do we have? Well, we have, out of the 5 indices that we follow, we have 3 of the 5 major indices: the transportation, the Russell, and the S&P. Transports and the Russell all broke supports, the 2 leaders. NASDAQ and the Spiders has not as of yet. So today and tomorrow is going to be interesting to see what happens. Now, usually on a big day, down day like this, you're going to have somewhere in the day buyers of dips. Now, we're up about 7 handles in the pre-market session, so it's basically already beginning. Let's see how this turns out into the opening. Now, remember, we have options expiration this week. Generally, options expiration is bullish towards the end of the week. Now, we could get a sell-off continue today, tomorrow, and then rally at the end of the week for that oversold bounce, and then just to resume next week. That's one scenario to play out. So, again, let me quickly recap. What am I looking for? There's going to be two scenarios to play out. I am not going to look to get aggressively short today. That's number one. Yesterday, when the markets broke support, we were short. A lot of the traders are short. A lot of traders in the industry itself laid into some shorts. Just by doing a little reconnaissance, talking to people, a lot of guys got short, and rightfully so. You should be getting short when you're breaking support. Today, maybe a little different. Usually, we get a little bit of a bounce back up and try to recapture half of this candle, this red engulfing candle, and then we kind of reevaluate. Now, with options expiration, throws into another mix. So we might have the 2 scenarios that we're playing out is one I just mentioned, that the markets sell off today, maybe tomorrow, and then rally Wednesday, Thursday, and into Friday for option expiration. Why? Well, you have a lot of the large firms that write puts and calls for options expiration to expire, and these puts and calls to expire worthless. Well, they have enough money to hold up certain stocks, certain ETFs, believe it or not, to expire worthless, and that may be the case. The other case could be is that we instead of rally for 2 or 3 days, that we can actually start this sell-off, maybe bounce today, and then really get weak into the end of the week, and people just take profits. That could also happen as well. I'm not in a prediction game. I'm just saying there's two scenarios to play out. We will follow whichever plays out. We will follow that route for the day. Okay? Now, I just want to get into, I want to show you a couple of things before we get into the charts, and I want to show you let's take a look at real quickly some of the metals. And here's copper. And I've been saying right up in here that does not look good. Now, obviously, this is February, so February and all of March, now we're into April. Copper is probably starting to hurt equities. And what I mean by is that now the metals are starting to bring down a lot of the risk-on mentality. Now, copper here, which is a leading metal, right? We call it Dr. Copper. You hear me say that all the time. This is breaking down, and I think a lot of the other metals are following suit, as well as equities. Now, when you're up at these lofty levels with no profit taken at all, again, there's one door, and there's too many bulls on the bus. They all have to get out at the same time. The bus starts to tip over, and that's the analogy that I'm using, is that you have to be very, very careful if you're holding a portfolio. If you're long a bunch of mutual funds, again, go out and buy some puts against your other portfolio. It's worth it because you could be down like gold, and that maybe not as far and fierce as that, because usually the metals, they when they want to go, they go, whether it be up to the upside or to the downside. You want to, just buy some protection. It just makes sense, instead of riding, a 10, 12, 13% correction. It's just crazy, Okay, so now there's copper. Let's take a look at gold. And this is what I mean when we have capitulatory sell-off. 1351 just alone from 3 days ago at 1571. That's a 200-point drop in 2 or 3 days. No, 2 days. That is insane. So this is why I say I'm using caution with equities, the same concept, that markets continue to run, and with no pullback and with no rest. This is what happens when you get one sort of catalyst in the markets, and then, of course, that terrible act of terrorism in Boston just kind of fueled the fire late in the afternoon. So please use caution here. You don't want to be caught into this. This you just can't get out. You're looking for try to hit a bid. Next thing you know, you're hitting a bid down down $6. So please use caution. Is what I keep saying. Here's the Huey. As you can see, look at this. Terrible, terrible, terrible price action. Do I think that gold is capitulating? Yes. Do I think that it's a buy now? Absolutely not. You want to try to trade it for the day? That's one thing. I wouldn't be holding gold now. I wouldn't be touching gold now. And yes, I love to buy when there's blood in the streets, but this is not over yet. I think gold goes lower, and I think that obviously not straight down, but within certain bounces, you might be able to sell rallies in gold before gold starts to kind of correct a little bit. Okay, now let's take a look at what happened overnight as far as China was concerned. Here's the FXI China fund. Now look at what's happening here. I usually try to leave a lot of these marks on here. This is the bear flag back in February. And I said, guys, and I've been saying this at the third quarter of last year, China is going to be one of the main catalysts that this market's going to come down. Now, they did a pretty good job masking a lot of their numbers the last quarter, the fourth quarter. So that is something that you can't fight. And even though you know it, you have to go with what price is telling you. And although everybody ignored what China was doing, right? Because look, FXI is running lower, and our markets were running higher, right? This is the spread. This is the real correlation of the SPX. It's not the SPX at all. But if you see this, this is telling you. This is a big warning sign. That's why I stopped holding positions until we start to realign with all of our other world markets. And the world markets were headed lower as well. Here is the emerging markets. So if the emerging markets are going lower, what is that happening to the S&P? We're running up, and we're running up on just because we're the United States and the Fed is pumping $85 billion in equity in our markets. Okay, that's fine, but eventually it's going to catch up. Something's going to happen here where somebody's going to notice what's going on. And that's why I turned to day trading instead of just swing trading and day trading. Don't want to hold that risk overnight for a big shock or S&P down 20, 30 handles. Okay, and what I want to show you is the SSE. That's the Shanghai. Now, the Shanghai looks better than the other two, the emerging markets and the FXI. Now, it could be just a big bull flag here, right? That's what I did. But we are in a downtrend channel, and we are holding the 200-day moving average. If this 200-day is lost on a closing basis, I think that this bull flag will be negated, and I think that we are probably looking to test some of these pivotal lows here, the 2025, 2000 here, and then you probably would reevaluate. But this does look better than the other three sectors. Okay, look at our NYMO. Our NYMO now has reversed from being up to down 35. Again, still within its neutral territory here, but still can move lower, and we are not oversold yet. So this tells me that we can move lower and or higher, obviously, but I think that we have plenty of room to the downside. Okay, look at this move from November, mid-November, all the way up here. This is plenty of room to run to the downside, and we'll get into the charts next. Take a look at this. Okay, here's our S&P cash. Now, the spiders and the cash did not break the lower trend line support. So they're one of the 5 indices that did not break. And as you can see here, we did break the 1555 support. We did break, but we held this trend line. This 1530 comes into play now. It's going to be key. Why? Not only is it a pivotal support area, but it also coincides nicely with the 50-day moving average in the S&P cash. So just keep that in mind, write that down. When we break and close below that, then I think that we're going to probably get a flush to the 1495 and the 1475 area easily. Now, yesterday's price action, believe it or not, guys, yes, we did some technical damage. We are still in an uptrend. Remember that, okay? Don't get too crazy looking to get short. I would not be looking to short down here. When I mean down here, meaning the last 2-day sell-off, I'd like to see a little bit of a bounce and fail up to the 50% of this candle and let it fail and let price roll over and then get in. Have a trigger in place and let it trigger. Don't get in early. There's no reason for it because you will get shaken out of the trade. Okay, here's the spider, same thing. SPY down, coincides nicely with the 50-day moving average. 153.60, 65 is going to be a big area. Coincides nicely with the 50-day moving average. Big distribution day, we all know it. So still up into this uptrend channel. Okay, so we need to watch and say, see what happens today. Looks like we're going to get a bounce today. Let's see if it holds. All right, now here's our 60-minute chart that I like showing. I have some support areas, and the 153.65 is going to be key. If it breaks, the spiders breaks that 153.65. We already took out the 155.35. If we break that, then I think you're going to see 150, 150. Look at our volume profile, our volume zones here. We have a thin zone in this area, which would be that gap area. Once we break that, we'll probably go and fall in through the gap and into these area here, 150, 150 to 152.50. So we'll probably pause in this area and we'll see what we'll reevaluate, then we'll go from there. But we have a thin zone, so if we break that, look for a big flush down below to the 152, 150, 150 in the spiders. Okay, here is the spider 30-minute chart. Now, and I kind of brought the chart in a little bit. Here are two main pivotal support areas from the February time frame of this year. 149.90, 148.65. And if I bring this all the way back, you'll see where I'm looking at. Here and then down here. Okay, this is back in December, the last week of December. The last week of February. So this is going to be a big area. If we lose this area again, right, 153.65, we're not going to go straight down there, but it's possible that we can be testing these areas in the next few weeks. So again, keep this in mind. This is just technical analysis of where can we go from here. These are my areas that I'm looking at as well. Okay, and IWMs not good when you have a leader breaking down below the 20, below the 50, and taking out main pivotal support areas. Now we are here, which we took out this area. This area here, this 89.20, right? 89.20 area, that needs to hold. If that's gone, look at the thin zone we have. You're going to get a big flush to the 200-day at least to start, and then you're going to have your main area is going to be this dark blue line right here, and that's going to come in at 82.50. So watch it. Russell has been weak ever since we started the beginning of April. We did rally nicely, and now we just took off. If you look at 1, 2, 3, 4, a 5-day rally, we took it out in 2 days. Gone. We took it out in 2 days. Fear is greater than greed. Remember that. Okay, so we have our leader, which is now broken down, has broken down. Now let's see if we get back. If we get back above just underneath the 50 and fail, that's going to be a great spot to get short. Okay, and here's our transports. Our leader now, this is our true leader, right? Aside from the Russell, has broken this long-term uptrend line. And we took out all of 5 days in 1 day. So this is why I'm saying, please use caution when you have your long portfolio and you're holding them. Okay, now this area here, this is what I'm looking at. And if we take this out here, as well as here, 102.5, 103, and we take that down, we're going to see the 200-day rather quickly. We have a real thin zone up in here. There's really nothing holding this. Okay, that's what happens when the market just grind higher every day, doing absolutely nothing but adding a few points with no support, no volume. You're going to get a big flush to here, and then possibly even test the lows, and that's the extreme. Now take a look at XLF. We have Goldman Sachs today reporting before the market. Let's see what happens. Citibank reported yesterday. They had some decent numbers. Wells Fargo and JP Morgan got hit during the day on Friday, I believe. So let's see what happens. Mixed bag here in financials. But if they start to break down and we lose that 50-day moving average, just bearish rising wedge, will get triggered. Okay, and that's something I'm going to be watching in the coming days. Diamonds, another one, did not. So we have the S&P. And Diamonds has not broken their uptrend line. But again, not looking too pretty here. So if they follow suit today, I don't think the Dow can hold all the other indices up. Now, Apple, interesting. I said if we break 420, we could see 400 rather quickly. So I did a little max pain analysis, a pin analysis for options expiration. And it looks like, I know it sounds far-fetched, but it looks like the pin is 400. In the Apple options. So if we break down and if we take out yesterday's low, I think we're headed to at least the 400 area, okay? And then we would reevaluate. Now, what do we have here? We have a double bottom, but we do have what? A head and shoulders pattern, right? We have a small head, left shoulder, right shoulder, and your neckline's right here, which technically has been broken. Ever so slightly. I mean, a dollar is really not. I want to see this thing really start to flush. If Apple does break today and close on its lows or near its lows, then I think you're going to get close to a 400 pin. I know it sounds far-fetched. I'm just telling you. Am I telling you it's going to get there? Absolutely not. I'm only stating that that's what I'm looking at, a 400 pin right now. So even if it's 405 from 420, it's not a bad move lower. So again, guys, I would only be trading Apple as a day trading stock. If it breaks 400, you'll probably see 380, 375. And then that would entice me and tell everybody, hey, if you want to look to gradually build a long position in Apple, then I think maybe that's where it needs to go. But we'll take it one step at a time. And then lastly is the SMH. As you can see here, that head and shoulders pattern technically was negated. So we're back into this little neckline area here. So break below that, we're probably going to test the lows here in SMH. Lastly, guys, is the Qs. I know it's a little bit long video. Apologize, but I wanted to get all the information out to you. Lastly is the Qs holding that uptrend line. Let's see what happens today. Let's see if the buys or dips come in and kind of support this rally. My guess is that usually a big move like this, you usually get a bounce. Let's see if this bounce can hold in the morning, and if not, we start to roll. I will be looking for some shorts during the day today. Have a great day, everybody. We'll speak to you tomorrow. Take care.